So guys, we are officially in the new year, and what better way to kick it off than with a dividend portfolio update? In this video, we'll get all caught up to speed, and I'll show you everything like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in January to kick off 2025 on a good note. But before we get to that, guys, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? Anything cool that happened to you guys this last month? I want to hear about it in the comments below. Anyway, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. But starting here with my main taxable brokerage account over on Charles Schwab, we can see that this is currently valued at $71,389, and every single year, this one account is generating $2,665 of dividend income. But going back to the account's current value for just a second, guys, this is down about $1,600 compared to this time last month. So December was pretty rough, so much so that it was actually my worst month of performance all year long. And if we look at the breakdown for the month over here on Snowball Analytics, here we can see I was down about 4.8% in December, so a pretty big drop just in that one month. My second worst month of performance in 2024 was back in April, where I was down about 4%. But generally speaking, if we zoom out and look at the year as a whole, I had some pretty solid months. In March, I was up almost 6%. February wasn't too bad either, actually, 3.5%. July, I was up 6%, so that was very solid. August was great too. September was pretty strong, up 3.5%. And then in November, I had a very solid month. I was up about 5.75%. But going back to December and looking at the breakdown between capital gains, or rather capital losses in this case, and dividends received, I saw a pretty big drop in share prices across my entire portfolio. Here, I lost about $3,700 in value and made up a little bit of that with about $185 in dividends just from this one account. And if we jump over and take a look at some of my dividend payments from this last month, overall, it was a very solid month of income. We saw that 185 just from my taxable account. But if we look at the combined dividend payments from my two accounts, my taxable account and my Roth IRA, overall, guys, very solid month. And in total, I brought in almost $300 in dividends. This was actually my second best month of dividends ever. And I had some pretty killer payments. J&J paid me $45.20. That was really strong. Chevron paid me over $30. Another great payment there. Realty Income paid me $26.39. And this is going to be a bit larger as we move forward because I have been picking up some shares of this company, which we'll talk about later. And then I got a killer dividend payment from SCHD over in the Roth IRA, almost $83. This was my largest dividend payment ever. And like I said, even though we saw some pretty crazy losses on the share price side of things, which is totally fine. Remember, this is a long-term game. Sometimes things will go up, they'll go down. On the other side of things, looking at the dividend income, it was a great month. But anyway, guys, now comparing my portfolio's performance to the S&P 500, to the NASDAQ, and to SCHD, in the last month, while my portfolio was down 4.77%, the S&P was only down about 2.5%. So the S&P saw less of a drawdown than my portfolio, as did the NASDAQ. Actually, the NASDAQ was up in this last month almost 1%, so this one beat me out by quite a bit. But I was still able to outperform SCHD in the last month, where I was down 4.75%, SCHD was down almost 7%, so we beat it by just about 2%. And then if we zoom out to look at the full year of returns for 2024, my portfolio was up about 18.5%, which is a pretty solid gain. Pretty happy with this performance, but we did underperformed the S&P 500, which was up about 23% for the year. The NASDAQ was up just a little bit more, about 24.5%. And SCHD was only up about 9.7% in 2024. So we did outperform the holy grail of dividend ETFs. And that big drop that we saw in December was quite an interesting way to close out the year. And as I'm sure you can imagine, there were quite a handful of stocks in my portfolio that were down by a lot, which is what we'll take a look at next. But before we do, like I mentioned, guys, all of the charts we've been looking at these last couple of minutes came from Snowball Analytics, which is actually the sponsor of today's video, and I want to tell you a little bit more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform pretty religiously to track my own portfolio for a while now, and I'm extremely impressed by just how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and I found the platform pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much insight it offers, not only into your portfolio, but also at the individual stock level as well. I mean, pretty much anything you want to know about a company's financials or dividend history can be found here within Snowball Analytics. Now, in my opinion, what really sets Snowball Analytics apart are the features that it has designed specifically for dividend investors. I'm actually convinced this platform was made for us, and here are a few of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show share price returns, which is only half of the equation, so it's refreshing to see dividends factored into these calculations. Additionally, Snowball also has a pretty robust event calendar that keeps you updated with upcoming news, events, and dividend payments, and they even have a dedicated dividend calendar so you can see who's paying you each month, when they're paying, and how much they're paying. Later on in the video, we'll actually use Snowball's dividend calendar to take a look at my upcoming dividend payments for this next month, so stay tuned for that. And then another favorite feature of mine is Snowball's backtest tool, which lets you see how your portfolio stacks up against the S&P or any other benchmark across multiple time periods. And once again, dividends are included in the calculations, which is awesome. And beyond these tools, Snowball also offers a community feature where you can check out other users' public portfolios to see what others are investing in, which is always a fun thing to look at. Plus, they have stats for stocks and ETFs that show what's trending and what's popular among other investors. This makes Snowball not just a killer portfolio tracker, but also a great place for dividend investors to get new investing ideas. So overall, if you're looking for a great portfolio tracker, which is something that every investor needs, then I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description of the video or in the pinned comment, or just scan this QR code right here to get a free 14-day trial. And if you like it, right now you can save 30% on your subscription with their New Year sale, which is running until January 5th, so time is definitely of the essence. I've personally really enjoyed using Snowball Analytics, and I know you will too, so definitely take advantage of that New Year sale and save 30% on your subscription. Now getting back to it, guys, taking a look at my best and worst performers for the month, my top dog in December was Main Street Capital Corporation, who was up 4.8% in the last month. And this stock jumped after the Fed announced that they would be doing less interest rate cuts in 2025. So initially they were thinking they would be doing 3, now they're only thinking they'll be doing 2, which means that interest rates will stay a little bit higher for longer, which means that business development companies like Main Street Capital Corporation will be able to benefit from higher interest income for a longer period of time. So anyway, that's what pushed the share price up this last month. And if we look at the performance over the last year, in 2024, Main Street was up about 46%. And this doesn't even include dividends, but either way, Main Street absolutely crushed it last year. And then moving on, my second best performing stock for the month, and pretty much my only other stock in the green, was Williams-Sonoma, who saw a pretty nice gain in the last month too. The stock was up 4%. And if we look at the performance over the last year, Williams-Sonoma was up about 93%. So this was my best performer in 2024 by a long shot. But anyway, those two stocks, Main Street Capital Corporation and Williams-Sonoma, both did really well for me this last month. And now, on the other hand, in terms of poor performing stocks, my worst performer in December was Chevron, who saw a crazy drop. The stock was down 11.73% just in the last 30 days, which if we look at the performance over the last year is going to leave them down 1% in 2024. Now moving on to my second worst performing stock in December, this one was Vici Properties, who was down 9.4% just in the last month, which is going to leave them sub $30 per share, which I love to see. Vici Properties is looking prime for purchase, and I've been buying more of this stock lately with this substantial drop, and we'll talk more about that in just a moment. But if we zoom out looking at the performance over the last year, Vici was also in the red in 2024, down 6%, but that is totally fine by me. Like I said, this one is looking prime for purchase, and I am stoked to see it coming down in share price. And then guys, my third worst performing stock in December, another real estate investment trust, we're talking Realty Income, who was down 6% just in the last 30 days, which if we look at the performance over the last year is going to leave Realty Income down 4.6% in 2024. And I also think this one is looking prime for purchase right there in the low 50s. And like Vici Properties, I started adding to Realty Income again. Super excited to be able to do that. And that's what I'm telling you about next. All Alright guys, now getting into all of my buys for the month, I actually added to quite a few different stocks in December, the first of which is Johnson & Johnson. I didn't add too much to J&J because I just recently started dollar cost averaging into this one again. In December, I picked up a quarter of a share at an average cost of $143.76. I figured that with the current share price so far below my average cost per share, which is around $159, now is a great time to pick up some more shares of J&J, buy the dip on this dividend king and bring my average cost per share down, while at the same time locking in a higher dividend yield on these new shares. So that was the first stock I picked up. The second one, we already talked about this, was Realty Income. In December, I added 4 shares to my Realty Income position at an average cost of $52.47. Now this third stock is another one that we just talked about, Vici Properties. I picked up quite a bit of Vici in December, 14 shares. I put all of my Christmas money towards this stock. And just real quick, showing you my Vici position with this recent purchase, I'm now up to almost 120 shares, and my average cost per share is still looking pretty good, $28.06, where prior to these purchases, I think my average cost was $27.90. So it jumped up a little bit, but nothing to be concerned about. I'm still up 3.25% just in terms of share price, and I'm up 4.6% including dividends. But anyway, the fourth position that I added to in December, this one's not going to be much of a surprise. This one is Clear Secure. I picked up 22 shares in December at an average cost of $26.36. And if we look at my Clear position, I now have 104 shares at an average cost of $29.70. So from dollar cost averaging, my average cost per share has really come down. There was a point in time where it was like $32, $33 per share. With that, I'm still down about 10% in terms of share price, and it's not much better on a total return basis. And you guys will have heard me talk about this before, but my goal with Clear Secure was to get it to 100 shares. And so now that I've officially hit that mark, I'm going to hit the pause button on adding any more. I want to put my contributions elsewhere for now, and that's why I started buying other stocks like Johnson & Johnson, Realty Income, and Vici Properties. And that's something I'm going to continue here in January, and possibly, depending on what the share prices do, possibly in the months that follow. But anyway, those were all of my buys in the taxable account. And then in my Roth IRA, I added to the usual SCHD and VU every single week, picked up quite a handful of SCHD shares, almost 24 in December at an average cost of $28.12. And I didn't add too much VU for the month, about 1/10 of a share at an average cost of $542 flat. And with that, now moving on and taking a closer look at my Roth IRA over here on M1 Finance, we're looking at my Margarita Money portfolio. And as we can see, it is currently valued at $14,905, and this last month was not kind to the Roth IRA. This account was down exactly 5%. But if we zoom out looking at the year-to-date performance, which is basically the performance throughout all of 2024, this account was up 15.4%. So not a bad year. And with that, if we look at my combined portfolios, taking my main taxable account, which is valued at $71,389 and is bringing in $2,665 of dividend income, and add that to my $14,905 Roth IRA, which is generating almost $400 of annual dividend income. We are right there on the brink, but this is going to bring my combined portfolio value to $86,294, which, as we established, is down, a little bit compared to this time last month. Nothing too crazy, but the projected annual income is looking great. Officially across $3,000 at $3,064, and that was one of my big goals for this last year, guys. I wanted to finish out the year with a projected annual income over $3,000, and we did it. And if we look at the month-over-month gain in projected annual income, we added $73 just in the last 30 days. We started off December with a projected annual income just under $3K. So I'd say that we made some pretty great strides this last month, and also in 2024 as a whole. I think we added maybe $600 to that projected annual income, just over $600. But with that, my goal here in 2025, guys, is I want to finish out the year with a projected annual income over $3,600, which amounts to $300 every single month. And starting out the year at almost $3,100, I am very confident that we can hit that, especially, at least for the time being, while we're adding to positions like Realty Income and Vici Properties and even Johnson & Johnson, which have higher yields, higher starting yields, and some of the other companies that I've been buying lately, like Clear Secure. Prior to that, I was buying a lot of Visa, which have lower starting yields. So I really think that's going to help me get to that projected annual income goal relatively quickly. And guys, as far as my watch list goes, starting with the list of stocks that I am somewhat interested in, I did make one addition to this list in the last month. I added Sherwin-Williams, ticker symbol SHW, to this list. And I did so after listening to an episode of the Business Breakdowns podcast, which I highly recommend. It's a great podcast. But in this episode, they talked in depth about the company, and it made me want to look into it a little bit more. And upon doing so, I mean, at least at a glance, things are looking really promising. The revenue growth has been very strong and very consistent as well. Earnings per share, same thing, and also same thing here with the free cash flow per share. So all of these growth metrics are looking pretty good. And if we scroll down looking at the dividend stats real quick, Sherwin-Williams isn't going to be the highest yielding stock. It's going to have a 0.7% starting yield, which actually is a little bit below the 5-year average at this point. So maybe not the best time to buy Sherwin-Williams, but it is a dividend growth monster. Even though they have that lower starting yield, the 5-year dividend CAGR is about 12.6%, which is awesome. And the 10 years even higher at 14.2%. So overall, I think there's a lot to like about this company, and I'm excited to spend some more time with it and learn more about it. But then guys, jumping over to the list of stocks that I'm a bit more serious about, this is the list of stocks that I'm very interested in. It's still the big three. We've got Old Dominion, we've got Rollins, aka my great white whale, and we have Zoetis. And all of these took some big hits in the last month, especially Old Dominion, who was down 21.25% just in the last 30 days and is really not too far off there from their 52-week low. So I think this one's starting to look a lot more interesting now. If it keeps going, I might have to start a position. We'll see what happens. But Rollins even saw a pretty decent drop in the last month, down 7.8%, which is going to put them in the mid 40s. I'm looking to add this stock somewhere in the low 40s, so I still think it's a bit pricey, and at least for now, my patience is paying off. I hope that January is a continuation of what we saw in December, but we'll see what happens. And then Zoetis is down a similar amount, 7.4%, and they're also not too far off there from their 52-week low. And with that, if you want to learn about some more stocks that also look very interesting, then check out this next video right over here, where I'm telling you about 3 of them, all of which look like great pickups right now in January. So click right over here to learn about those, and I'll see you in the next one.